We've got 100 people who've registered for the session, which is a clear indication that this is a hot and relevant topic right now. And it's no surprise really with the global situation at the moment, which we don't need to dip into. I think more individuals and companies are looking for new opportunities, and obviously Africa is a big one. So thank you all for your time today. I have no doubt it's going to be a brilliant hour that you're investing of your time. And we're so pleased and honored today to have our amazing panelists from our partners RMB and Trade Law Chambers. We couldn't ask for more expert advice and insights and wisdom from them. So thank you to them for making time to be here today. So today we're going to run, obviously we have our panelists who'll be sharing information around their specialities. We're also going to be running a quick poll. That poll is just so that we can understand your needs a little bit better, so we can help follow up with you a little, after the session if you need any further support. At the end of the session, we are going to be running a Q&A. So please feel free to utilize the Q&A little box at the bottom of your screen throughout the session, and we will get to those at the end. So before I introduce our speakers and hand over to them, I'm going to just hand over to Claire Alexander, who is my partner in the Africa Scotland Business Network. And Claire is going to just very quickly give you an overview of what the network is and what we do, so you have some context. Thank you, Claire.
Thanks very much, Nicola. And a warm welcome from Africa Scotland Business Network here in Cape Town. My name is Claire and I'm one of the 10 founding members of ASBN. We of course have some of our members in this event with us today, but we've also got a lot of new faces. So a very warm welcome to you if this is your first engagement with ASBN. And for that reason, I'm just going to very quickly introduce who we are and what we do. But firstly, a quick shout out to our members who are in the audience. We've got Bowman's Law Firm, who work across Africa, Williams for Project Management in Cape Town. We've got Safer Training tuning in from the UK. They provide oil and gas training services across Africa. Welcome, Ian. We've got Expat Web in Johannesburg. They are our tax and immigration specialists. We've got Dinsmore and Associates in Cape Town. Welcome, Niel. We have Edinburgh Business School of Heriot-Watt University in Scotland, who also have an office in Johannesburg. Welcome, Melanie. We have Hurst & Wills Property Investments. Welcome, Lisa. Lisa is also one of our other founding members. We have Kwetu, the taxi delivery startup in Soweto. Welcome, Vuyo. We've got Bright Rock Life Insurance. Welcome, Andre. And of course, we've got Rand Merchant Bank and First National Bank staff tuning in from across Africa. So as you can see, we have incredible diversity in our network of companies and individuals, and that's just one snapshot of the amazing expertise that we have here at ASBN. So first and foremost, ASBN is an independent business network. We're managed from South Africa, and our focus is on building a proactive, strong and quite vibrant business network across the African continent, which we then connect directly to Scotland and the UK through our members and our partnerships there. Now, we were only formed 8 months ago, and already we have welcomed 150 business people from 63 companies in 8 countries into our thriving business community. In fact, we've just moved into Kenya and Nigeria. Welcome Niger Link in Lagos and Amina International in Nairobi. And part of the beauty of ASBN is our diversity and our inclusive approach to building a representative business network. Now, we have members from 25 different sectors, ranging from startups to SMMEs, to African and global corporates. In fact, our youngest member is only 23. I can't really say how old our wisest member is, but our business community is clearly primed for effective networking and making quick connections with businesses of different sizes across different industries. And of course, the ability to reach into different countries with common ground on your side. So why Scotland? Well, apart from my nationality and the nationality of 4 of our other founding members, we've always been aware of the immense opportunities in the shared economies between Scotland and Africa. That includes oil and gas, manufacturing, technology, education, training, agriculture and agri-tech, and of course, Scotland is a world leader in renewable energy, of which Africa, as we know, presents ample opportunity for partnership and investment. We also enjoy a healthy partnership with the Scottish Government, and we work together to put Africa on the map for Scottish and UK companies. We welcome them into our network, we give them a business home here in Africa, and then we connect them to businesses on the ground across the continent, and of course, vice versa. So going forward, please do stay in touch with us. We're a hardworking but super friendly team. We are across all the social networks and LinkedIn. And if you would like to get to know us and our work a little bit better, please just feel free to get in touch with us anytime. Thank you.
Thanks so much, Claire. So our first panelists are from, oh, sorry, I beg your pardon. We're going to launch the polls quickly. It'll only take a minute or two. And we really appreciate your feedback at this point. We'll just give you about another 30 seconds just to select the multiple choice options that are in front of you. Thank you. You can just, it's very easy, just click on the option that applies to your circumstance. Just give you about another 10 seconds. Okay, I think that we don't need to take up any more time because we have so much to get into. So we'll end the poll now. Thank you. Okay, just get rid of that. Okay, so to introduce the team from RMB, our first speaker is Daniel Kavishe. He is the Sub-Saharan economist at RMB. I've been lucky enough to attend one of the sessions that Daniel's hosted. He is a wealth of information. And so we really couldn't be asked for a better person to deep dive into Sub-Sahara. As you can see on the slide at the moment, Daniel has invaluable experience and expertise in this. So thank you, Daniel, for your time today. Before I hand over to him, I'm going to introduce his colleague, Siobhan Redford. Siobhan is the South African economist at RMB. In her past life before RMB, she was at the South African Reserve Bank and made great inroads there and brought her expertise to RMB in March 2019. So thank you, Siobhan and Daniel, for your time today, and I'm going to hand over to you now. Thank you.
Lovely. Hopefully everyone can hear me clearly. So as you've heard, my name's Daniel. I prefer Danny, sort of like my trading name. If companies can have them, so can I. And today I'm really just going to chat around the continent, really. We often get a lot of questions with respect to which country should corporates or institutional countries investing, and what are some of the markets in which we like. I'll do it slightly differently. I think whilst I will focus on some geographies, I think one of the key things would be to ensure that I touch around the comments on thematics. I'm getting a few comments there that people can't hear me, so I'm going to speak a little bit louder. Can you hear me now? Just a thumbs up or any indication if I'm a little bit louder. Yeah? Okay. Much better. All right. I'll just speak a little bit louder. Great. So I'll start off with 4 key thematics that we actually look at. If we can go to the next slide. Across our core jurisdictions, which in this case, I tried to look at the top 10 countries which we ranked during the course of last year going into 2020 that will be significant for some of our discussions here. So we've got Namibia, Zambia, Ghana, Nigeria, Kenya, Botswana, and Mozambique. My colleague will touch a little bit more on South Africa later. We looked at 4 key themes that we think would be quite important for us when we're going into the period of 2021. So politically, I want to start with that because what we've found is with a lot of corporates that are moving into most of these markets, they underestimate and underplay the impact that political uncertainty can have on their businesses. And I think if you look across most of these markets, the scale that we've put there really is just an indication from what it is we're quite comfortable with towards countries which we have certain concerns. So the countries with certain concerns at this stage are Zambia and Mozambique. Zambia really not in the same vein as Mozambique. Zambia has to do with the fact that it is going into an election year. And so what tends to happen traditionally is that you've got this massive expansionary policy, which sometimes can be void of fiscal prudence. And so that's one of the reasons why we've given it somewhat like an amber color to indicate that it could be something to watch. Mozambique has recently come out of an elections, but I think the issues that have embedded this country over the past 10 to 20 years with respect to the uncertainty within Frelimo and Renamo and the talks that they've had with respect to peace. And then quite recently, the fact that we've had a spike up in insurgency, probably one could argue separate to the political sphere, but still creating some sort of angst to people who are trying to move into this market, also creates an amber sort of rating for them. Across most of our other markets, however, at this stage, we're quite comfortable with the political sphere. We're starting to see strong policies that are there to support growth and policies that are also there to support, at least where we sit right now, which is we're going through a massive humanitarian crisis through COVID-19. And I guess the response from that has been quite strong. The other key theme, of course, then that dovetails immediately from that is the economic theme, where we consider not only the market size of these various countries, but then we also consider, of course, growth. Now, as we're all quite aware, it is likely that most of our African markets this year will go into a deep recession. Now, unlike what we have discussed when we looked at our developed markets, which is a situation where everyone is calling a V-shaped recovery, we don't simply see that for most of our jurisdictions. And the reasons behind this is you either have countries that have entered this crisis already on a weaker footing, and there we highlight Namibia and Zambia. So Zambia was growing by about 2% about a year ago, but these numbers have been staggering down quite consistently over the past few years. Namibia was already in a period of negative growth, and going through this crisis, it's likely that they will not necessarily be able to get that same growth momentum as one would have hoped for. Other markets that we were quite concerned about have to do with environments like Nigeria, which again was comfortably growing by about 2%, a little bit over 1%. But going through this crisis, the impact that it's had on the oil sector and the ability to maintain their FX levels, which they haven't, tells us that there will be heightened risks in these markets as well from a growth perspective. Notwithstanding also a market which has been a darling for most of us. It's rated number 13 there, as you can see on the slide, which is Botswana. This country has been growing quite well. They've managed to build up strong fiscal buffers and reserves, but you're working with a market where 80 to 90% of it is directly being impacted either by the diamond export earnings or through tourism or through travel. So it does create a massive risk for people who are trying to enter this market. And then we're also going to touch on, of course, the social impacts. And when we talk about social impacts, we need to consider the size of these markets and whether or not people in these markets are able to afford basic goods. So it really becomes a discussion around inflation. Now, when I look at all these markets here, one of the things that immediately stands out is places like Ghana, where going through this crisis, despite the fact that they had some sort of difficulties with respect to picking up economic growth, they were quite one of the first countries to immediately cut and have a strong lockdown measure to ensure that the economy would be able to survive this. They're starting to give us some indications that they will be able to bounce back from this crisis a little bit better. Now, you'll notice on your graph there that all countries we have them at this moment are red, simply because we expect this crisis to be quite prevalent, but there are certain key markets here which we think will be able to bounce back faster, Ghana being one of them, and another one as well being Kenya. So I think one of the key things for Kenya that has managed to shock us is the fact that we had this massive anticipation, but halfway through the year that we were going to be seeing all of these deep cuts that were going to be taking place across the market. So we expected tourism to falter, we expected tea earnings to falter, we expected horticulture earnings to falter, and that simply hasn't happened. In fact, we've actually seen a massive pickup for the first half of the year in this jurisdiction, which tells us that Kenya, at least from a corporate institution that's trying to enter this market, will have a lot of opportunities. And it beautifully dovetails into the fourth factor, which we consider, which is technology. Now, across the continent, we only have 36% penetration of internet access. Now, that tells us that there are a lot of opportunities. And what we look at here is which countries have been able to adapt these, being able to adapt quickly towards having most of these technological focus. One of the things that we have found is environments such as Kenya, Botswana, and Namibia have some of the strongest technological growth opportunities over the next few years. And thus it tells us that these markets will be able to dovetail, despite COVID-19, to shift to the new normal at a much faster rate than what we're seeing across some of these other jurisdictions. If we can move over to the next slide, kindly. Thank you. I think these are some of the indicators that are telling us, and I think this slide specifically is a clear indication of COVID-19, who's going to be impacted first and last, and who's going to be able to really withstand the challenges. And one of the things that we're finding is that Mauritius has actually been one of the countries that has managed to put this, nip this in the bud quite quickly. They've had some of the fastest tests that they've been able to do across the country. That has meant that they've managed to get the disease under containment. They are facing other risks, of course, with the fact that the tourism sector is not doing quite well, but automatically it starts seeping into the rest of the market that they'll be one of the countries that have dealt with the crisis a little bit better than most other countries. Ergo, they'll be one of the countries that can jump off from this a little bit better. Another country, of course, is the one that I'm in, South Africa. Also been able to do quite well, despite the fact that there have been several areas that have been highlighted as being quite risky areas with respect to how quickly the disease has spread. From a government point of view and how quickly they've managed to ramp up cases relative to the rest of the market, we can tell that this will be one of those countries that does quite well, and notwithstanding as well Ghana. Now, there are two other themes that I'd like to touch on, or if you could just go to the next slide, which I think will then really sum up what it is we think about Africa and coming out of this cycle. The first one is, given that everyone is going through this period where fiscal strain is going to be felt across all of our markets, we have to think as pure economists and what economists are suggesting. And what has happened since World War II until today is that we have massive fiscal expansion post a crisis like this. And then we've got private sector investment going into construction. And I think that's something that we need to highlight today. So prior to this, if we looked at construction figures across the continent, we could already see that real estate is one of the areas where investments are taking place at a rapid rate. Energy and power is also a key sector that the continent is going to be benefiting from over the next few years. And then transportation and investments around mining already become clear sectors. If your company is partnered in this area, that you will be able to dovetail and maintain that growth irrespective of what happens through the COVID-19 crisis. The other key theme that I'd like to highlight, if we could go to the next slide, is some of the most promising industries. Now, again, this is very key for us. And if you think about the continent, where are people really parking their money? And what we've found over the past few years is that the bulk of the cash is going towards food and beverages, as an example. Now, this has a lot to do with how people are consuming and how it is people are able to, how people are able to onboard what it is needed in the larger retail market. But when we think about agriculture and related agricultural products, massive opportunities do lie there for the continent, as it can dovetail beautifully as to what then can be needed for us as we go through this crisis. I haven't been accorded that much time, but there is one last thing I'd like to share before we touch a little bit more on South Africa. If we could go to the next slide, because I think this is really the one that will sum it up for all those who are on this call. If you consider that we have a bulk of about 64% of the trade doesn't take place within the continent, but it takes place externally. And with the new Africa Continental Free Trade Agreement, we've got this massive opportunity as a continent to increase intra-trade across the continent. What that means is when we discuss a market, you basically will be picking a country where it's easy for you to set up operations. But in future, you're going to be exposing yourself to the larger continent as opposed to a regional body or block. And I think that's quite key. And I know these discussions have been taking place for quite some time, but for the first time in a long time, we're starting to see this really garner momentum. And I think it will dovetail a little bit later when we talk about trade. Siobhan, over to you. Maybe you can just give us your thoughts on South Africa.
Thanks, Danny. Yeah, I'm going to just be quite brief and give you some thoughts on the South African context. South Africa is not anymore the largest economy on the African continent. That honor goes to Nigeria. However, it does remain the most industrialized and diversified economy. So just I'm going to use the same for kind of contexts that Danny spoke to. So I'll start first with the political context. So we are in a situation where there is a fair amount of concern as to what is going on with politics in South Africa. There has been a fair amount of uncertainty and changing of minds as to how strong Cyril Ramaphosa's presidency is. And, you know, the thing is that the cycle in South Africa is effectively a 2-year cycle, because in between our national elections, we actually tend to have municipal and provincial elections, which then kind of give a sense as to how people are taking things. So our politics is difficult. We do find that there has been a massive amount of corruption, even now through the COVID's kind of procurement and such like. There has again been a lot of scandal over food parcel, you know, related corruption on getting PPE and such like. But you know, and it is unfortunately well known. We have had a lot of strong talk against corruption in South Africa, but the action that comes behind it is what seems to be slow. And this is basically a way of discussing South Africa's issue, summing it up in general when it comes to politics. The really good news is that we do still have judicial independence. Our judiciary in no way has been impacted by politicians, is not influenced by them, and cannot be. And this backs our very well known and probably one of the best constitutions in the world. And as I've already said, a big issue is that our policymakers are excellent at diagnosing the issues with the economy. It's the implementation where we lack, and this includes for the economy. And we saw that going into this COVID shock. South Africa was already in a recession. I think by the I'm trying to remember. I think we were already in recession. Yeah, so the first quarter of 2020, we were already in our third quarter of consecutive quarter of negative growth. And obviously the real shock is going to be the second quarter of this year, where South Africa experienced its hard lockdown and then a lightening of lockdown, but, you know, remaining relatively strict. Actually, by a number of standards that I've seen, compared to the rest of the world, South Africa has had one of the strictest lockdowns out there. And this is obviously going to impact the economy. Our tourism sector has suffered terribly, as is, you know, the hospitality, restaurants, and as well as the production of tobacco and alcohol, which does have a potential impact on our agricultural sector. Although this year, the agricultural sector, particularly from a maize point of view, is actually going to be our shining star. So yeah, what else South Africa has in terms of its benefits relative to a number of its neighboring countries, its fellow Sub-Saharan African countries, is that it has deep and liquid financial markets. It is easy to invest as a foreigner in South Africa's stock exchange, and it is easy to take the money out. There are exchange controls, but those remain fixed for residents of South Africa and not for foreign investment. On the social side, social unrest in South Africa, although if you ask South Africans, they might disagree, is relatively less so than you find in the rest of Africa. However, there are a number of issues, and sometimes these bubble over, and we do see them, you know, coming to the front in the way of protests, and you know, it's something that we shouldn't completely discount. These are particularly around inequality issues, which we see in things like having a dual health and education system in South Africa, where you have a private healthcare sector, people who can afford to pay for medical aid, you know, health insurance, private health insurance, make use of the private sector, but you then have the public sector, which is you know, got a very heavy demand on it, but far fewer resources. Education also very much set up with a private sector and a public sector, and a number of issues. We also have other apartheid related kind of remnants that remain in the system. Land remains a contentious issue, mineral rights and such like. So whilst it's not as bad as the rest of Africa, there are social issues to be aware of. And I'm just going to finally just touch on the technological issues, technological kind of context in South Africa. Urban areas in South Africa are actually quite well you know, connected in terms of connectivity. I have had fiber to the home for a number of years now already, so it's nothing new to a lot of your big urban areas, particularly Johannesburg, Cape Town, and probably Durban. However, your rural areas, the networks are sparser. Fiber to the home hasn't quite reached there. You know, we are talking quite a big area to reach, although your cell phone cellular connectivity is somewhat better. And South Africa many years ago was almost the case study for Africa as for a case use of cellular telephones, where it was first thought it was going to be a luxury product, but actually cell phones are now used you know, for everybody. And then yeah, finally the biggest issue, and you know, I speak to you in a country that is currently undergoing load shedding for what feels like the millionth time this year, and that is that we really need to have a stronger push for the allowance of renewable energy in producing energy in the country. So that's just my kind of short overview of South Africa. I'll be happy to take any questions when we get to the Q&A. Thank you.
Thank you so much, Siobhan and Danny. That was really fascinating. Thank you again for sharing your expertise and knowledge with us. So as Siobhan said, we will have a Q&A at the end of this, so please keep your questions for them. I'm sure you have many, as do I. So to introduce the team from Trade Launch Chambers, who are members of the network, so thank you for your time today, Rian and Niel. Rian is actually going to be facilitating the Q&A session on behalf of Trade Launch Chambers, and Niel will be taking us through some slides in a minute. So Rian is the CEO at Trade Launch Chambers. He is obviously extremely experienced in advising multinationals, governments, intergovernmental institutions on issues across Africa, UK, Europe, Oceania, Asia. So we are very lucky to have him here today. And then on to Niel, who is the CFO at Trade Law Chambers. Thanks, Niel, for your time today. So Niel specializes in the international trade law area. He's been the director of Trade Law Chambers and the commercial law firm Geldenhuys, Joubert Incorporated for more than 10 years. So thank you, Niel, for your time today. And I'm going to hand over to you now.
Thank you, Nicola. Can you hear me properly?
Yes, we can.
Thank you. Thank you for all the participants for attending today's webinar. And thanks to Danny and Siobhan for giving us an overview of the economic opportunities in these key investment markets. If we can go to the next slide, please. Yes, as I said, from an economic perspective, there are a lot of opportunities in different African markets. As we've heard from Danny, there's a very low intra-regional trade in Africa. But I'm going to give you a very brief overview, high-level overview of the trade relations between the UK, including Scotland and South Africa, and between South Africa and these investment markets, and between the UK and these investment markets. Next slide. So as you well aware, Brexit has finally happened. We're still in the transition period, which will come to an end on the 31st of December this year. Until then, the UK, including Scotland, is still part of the EU, and they're still benefiting from preferential trade with South Africa and its fellow SACU countries, as well as Mozambique, in terms of the EU SADC economic partnership agreement. It's important to keep in mind that international trade happens in terms of WTO rules, and the tariff commitments that countries have made at the WTO, that they apply to all countries trading with them. Free trade agreements are exceptions to the WTO rules, and in order to benefit from these preferences, you have to be a member state to that free trade agreement, and you also have to obviously show that the products that you're trading originate from your country, or has been sufficiently worked, or have undergone value addition, so that it's deemed to be a product of, for example, South African origin. So what would have happened if no new agreement was put in place is that from the 1st of January next year, this preferential trade, or free trade, free of any import duties between Scotland and the SADC grouping, which is South Africa, and it's for SACU member states as well as Mozambique, is that this trade would have reverted to WTO levels. Where in many cases, we would have seen very high tariffs imposed on imports both ways. The UK has luckily negotiated a continuation agreement, or a new economic partnership agreement between the SACU states plus Mozambique, to make sure that this preferential trade will continue from the 1st of January next year. So that's good news for exporters from Scotland, also obviously for exporters from South Africa that make use of these preferences. Just a brief look, what are the attraction when looking at investing in South Africa? What access do we have to the rest of Africa in terms of trade agreements? As I mentioned, South Africa is in a customs union, similar to what the EU is, with Botswana, Namibia, Eswatini, which is old Swaziland, and Lesotho. So once you import a product into SACU, it can move freely between these countries without any the imposition of any import duties. South Africa is also a member of SADC, so it's a trade grouping existing of 16 countries. 13 of those countries belong to a free trade area. So if you investing in South Africa, you have access, duty-free access to that market of 13 countries in SADC to actually export your goods free of duty. We're looking at countries outside of SADC as well today. Kenya is an example that's in the East African community. As a South African exporter, you wouldn't benefit from reduced tariffs or preferences going into Kenya. So this is where the new recently launched tripartite free trade agreement becomes important. The aim there is to negotiate tariff preferences between different regional groupings in Southern and Eastern Africa. So to connect SADC, COMESA and EAC, 27 member states. And then also even more important for South African exporters or investors in South Africa to benefit from trade with the rest of the continent. Most of African countries are currently involved in negotiating the African Continental Free Trade Agreement, where the aim is to have a continent-wide free trade agreement, obviously with the aim of having free trade and increasing the intra-regional trade within Africa to move away from the focus on trade with Africa and the rest of the world. Next slide, please. So from Scotland's perspective, as I mentioned, there will be a replacement agreement. So the preferential trade that Scottish importers currently have with South Africa and SACU countries as well, Mozambique, will continue. There are future possible opportunities if you're looking at investing into South Africa or any other SADC countries in terms of increased access to other African markets in terms of the tripartite free trade agreement, as well as the African Continental Free Trade Agreement. The implementation of the African Continental Free Trade Agreement has also been affected by COVID, as has been postponed to next year. The tripartite free trade agreement is also still in the process of being ratified and implemented. So it's not overnight. These agreements take a long time to negotiate the actual tariff benefits. But it does provide opportunities for future trade and investment. In terms of Ghana, Ghana forms part together with Nigeria of a regional trade grouping in Western Africa, ECOWAS. They negotiated an agreement, a free trade agreement with the EU, but was never finalized. Ghana does have a bilateral EPA with the EU, and as such, the UK is currently negotiating a bilateral agreement with Ghana. That still needs to be finalized as well. Similar position with Kenya. Kenya also doesn't have preferential trade or an EPA agreement with the EU. It does have, like other African countries, unilateral access, preferential access to the EU market. But again, through the tripartite free trade agreement, there should be opportunities if you're looking at investing in South Africa as your springboard into the rest of Africa to access the Kenyan market in future as well. The UK is also currently involved in negotiating a continuation agreement with Kenya to make sure that Kenyan exports can still get into the UK market after Brexit. In terms of Nigeria, as I mentioned, EPA was never signed. The UK also doesn't have any existing trade agreements with Nigeria. So similar to the position with Kenya and Ghana, currently until those bilateral agreements are finalized, trade between Scotland and these three countries that fall outside SADC and SACU will take place on a WTO preference or tariff level in terms of the most favored nation tariffs. So these, that was just a very brief overview. It's a very big continent to cover in such a short period of time. I think just to summarize, there are very good opportunities for importers, exporters in terms of preferential tariffs. and this should definitely form part of due diligence for any investor or anyone that wants to do business in these African markets. Firstly, important to look at the WTO commitments that these countries have made, but also these benefits that these countries have in terms of their existing regional trade agreements. Danny mentioned that the impact of the Continental Free Trade Agreement, as well as the tripartite, is also something not to ignore, because if you do get preferential access to a regional trade agreement at the moment, you could face increased competition from other big economies like Nigeria and Kenya in future due to the implementation of these agreements. So while in the short term, you might be in a more competitive position in a specific African market, you need to take into account the impact of these negotiations on your future business. Of course, many of these African countries have high levels of risk, so it's very important to undertake a due diligence on domestic legislation, regulations to make sure that you comply with those when going into any of these markets. Yeah, so of course, again, from a legal perspective, make sure that you address any possible risks in terms of commercial payment risk, etc., where banks can also assist. And at the end of the day, be aware of the rule of law and the legal system in every country to make sure that you're aware of the risk going in. I think that's it from my side for now. I look forward to answering some questions from the participants. Rian will also be joining us in answering the questions. Thank you very much.
Great, thank you so much, Niel. Thanks for taking the time out today to share that with us. I think, as you said, you've just scratched the surface of what is obviously a great volume of knowledge. So thank you. So now we're going to go into our Q&A session. If I can ask our speakers to please activate their videos. I think Danny's going to leave his off just to help with his sound a little bit. But I can see that we've got quite a few questions that have come up. So I will read them out. Okay, we've got one from Guy Harris. Has the EIB view on Mauritius changed? Who from our panel would like to answer that question?
Hi, can you hear me clearly?
Yes, that's fine. Thanks, Danny.
Lovely. So I'll go with that. I'm not sure whether or not context is everything. So I can only assume what it is the question is actually asking around. There have been some concerns over the past few years with respect to Mauritius sort of being a safe haven with, when it comes to taxes. And that did create some sort of tension with the AIB. It's created some sort of tension with your Minister of Finances as well across the continent. Earlier this year, we saw some comments that were coming in from some of the neighboring markets, at least to us. If I'm not mistaken, it could have been Zambia, just making reference to the fact that some of these double taxation agreements were not necessarily going to stand for the rest of the market. They were purely benefiting Mauritius. So I can only assume the question is along those lines. And though I can answer it in the sense that they're still quite ongoing, if this is the context that you're asking for, I think Mauritius has come under a lot of scrutiny, not just this year, but the past few years, for being able to create an environment where it does seem as if it's become easier for companies to operate from that, at least from a tax basis. So a lot of discussions have gone around that. I think EIB has been just one partner. The European Union did get involved in that a few years ago as well. And at this stage, it's very hard to determine how this will operate or change. What we do know is that for now, businesses are not necessarily finding the difficulties associated with operating in a market that has sort of been given those ratings or ranking, at least seen by international parties. So again, I would hope to have a little bit better context on that question, but I'm assuming that's what he was making reference to.
Great, thank you, Danny. Guy, if you wanted to connect with Danny after this, I'm sure he'd be happy to chat with you further. Our next question is from Sophia Beckwith. She has a question around the COVID recovery slide.
Sure.
Have you found any specific information around why certain countries have a higher recovery rate, both in Africa and compared to the rest of the world? Tanya, this is another one for you, I think.
Yeah, I think actually Siobhan could also maybe touch on this as well. But I want to start off by saying a key thing has actually been testing. So when we started this exercise a few months ago of tracking tests that are conducted per 1 million population as an indicator, and then also tracking the recoveries as a ratio of how many tests get conducted, we found that countries which generally immediately ramped up their medical fraternity, either through fiscal support that they received from government, or already having a good ratio of 1 doctor to, let's say, 100 or 1,000 patients. These are the countries that were quickly able to deal with the coronavirus and to have a faster recovery rate than what we had expected. The reality is our markets are considerably different. So the case in point of a South Africa as an example and a Mauritius would be completely different from what we're finding now in places like Namibia and Zambia, where cases are only now starting to ramp up simply because they've actually increased the rate of testing. With respect to other sort of theories that have been circulating, you know, we're not necessarily of the view that some markets had a better immune to the disease or anything like that. I think if you think around the March period when the virus really was starting to permeate across the country, the various countries, we just found that certain markets closed their borders quickly. And that has meant they had less cases within the country, and they clamped up on a lot of the spread on the benefit of the fact that they had this movie that they were watching from the international markets. And that helped them react a little bit faster to the disease. So I hope that helps to sort of answer that question. I don't know if Siobhan, you've got anything to add for SA.
Just really the only other thing that's probably worth bearing in mind is that we also managed to start seeing it ramping up at a time where we knew quite a bit more about the disease than, say, even when it had hit Italy. So, you know, that helped us approach the patients in a more effective manner. So not quite as experimental almost in that sense.
Absolutely, yeah.
Great, thanks Siobhan and Danny. Our next question is from John Murphy. He wants to know what the panelist's views are on the prospects for businesses that depend on groups of more than 50 being able to convene, churches, weddings, sports, etc. Not sure who would like to tackle that one.
I'll take it. Honestly, I think you've kind of got to brace yourself for an extended period of time where there will be limitations and restrictions. I think that you're going to see more and more petitioning of government that it isn't just about 50 people, say. I mean, you know, a football stadium can probably do social distancing and still quite comfortably hold more than 50 people if it is correctly dealt with. However, you know, I think that big social gatherings, and we have seen it happen multiple times, are often the cause of a future spike. And so it's probably going to remain relatively restricted and only slowly allowed to be kind of opening up under very strict circumstances. You know, I would almost be betting on waiting until next year even. Sorry.
Yeah, I'd like to add on that. I can only assume that the question was directed for South Africa. The rest of our markets didn't really close down in the exact same nature. So if you consider, I'll use Kenya as an example. Kenya had a staggered lockdown period, and it was mainly really isolated to the main capital. Most of the other regions didn't necessarily clamp down most of their operations. Plus, you have a dual economy taking place across most of the continent in any case. So the adherence to a 50 mark is probably harder to track than in an environment like in South Africa. So for most of the other continent, one of the things that we're finding, even as data comes in, is that while demand has tapered, there hasn't really been a lot of narrative that people haven't been operating in various stores or in various establishments. Tanzania comes to mind. Parts of Namibia also come to mind as well, where you could still have more than 50 people in a place that were operating. So yeah.
Great, thanks Siobhan and Danny. Our next question is another one from Sophia Beckworth. This is one for you, Siobhan. Sophia is asking you to unpack the point around the dual healthcare system as an exacerbator of inequality, looking at the examples of South Africa and Brazil that are both, obviously very unequal, and then the US as an example where there's no public health care during COVID, and this has essentially crashed the middle class. I don't know if you can expand on that, the rationale behind that point a little bit.
Sure. For me, I don't think it's, well, I think, the healthcare system, so for example, the dual healthcare system, which I used, and it's just because it is relevant at this point in time, wasn't so much that it's an exacerbator, but it's definitely one of the symptoms of inequality in South Africa. It's only people who earn at the top end of our economy, and actually in that way, South Africa very much has a dual economy. Your white collar kind of sector, is well earning, almost comparable in many ways, at least from an earning power point of view, relative to some first world countries, although this does change. But then you have a very strong informal economy. You have, a number of unskilled workers who don't have access to private healthcare. And, I just look at the examples around me, but my sister was a doctor for a long time at Baragwanath, which is the largest hospital in the Southern Hemisphere and is a public hospital in South Africa. And, it's just what is available to the doctors. It's for people, they see more people than normal. If you're in a private, normal being private sector, there aren't appointments if you're doing regular checkups. You just go and stand in a queue. People, if they have a regular kind of a day where they have to go to a public hospital, will be queuing from, say, 4 o'clock in the morning to make sure they get seen. Whereas I know if I go to my GP, I will see him. You kind of make an appointment there. There are choices, and I can choose who I want to see. I don't get to see who's just on the kind of list working that day. So it really is about, and it's also about the kind of care you can have, the drugs you get availability to, more expensive drugs. If you're having surgery, generally much faster unless you're urgent, because there just are there's so much greater demand in the public sector for the healthcare services relative to what is supplied, whereas in the private sector it's a lot easier to access. So it's just one of those symptoms, one of those signs that this continues to be an issue. And on that, I'm actually I do see the point of South Africa looking at something like a national healthcare system. I'm hesitant in saying that we need to go straight forward with it. I think inequality in South Africa is something that if we dealt with and improved would be beneficial to the country and be one of the big, way of unlocking a lot of potential in South Africa, especially from a consumer point of view. But we have to do it carefully. And, it's about rather lifting the public sector and its availability and how it operates, rather than bringing the private sector kind of to the public sector level. So I don't necessarily think that I have my doubts about it happening in the timetable that the government has suggested, but there are definitely arguments for it.
Great, thank you, Siobhan. Our next question is from McLean Sabanda. Are we likely to see a decline in funding for infrastructure projects in Africa, owing to governments reprioritizing their budgets and international development agencies prioritizing their host country's economic recovery? Who'd like to tackle that one?
So I'll take that. There are two sides for the infrastructure development, at least the way in which we're thinking about it. You've got your immediate capital projects that were highlighted by most of our governments that they indicated in their budgets during the course of this year. And we have seen an immediate decline on that. I think governments have had to reprioritize, given that they're dealing with a massive humanitarian crisis, and it probably does, it will rub people the wrong way if they continue building some of the sort of plans they have for offices, roads, etc. One of the things though that we are saying is, one of the things though that we are finding as well is, in this environment, whilst there could be a decline in capital projects during the course of this year, when countries tend to recover from a massive crisis like the one they have now, you have both private and government tend to ramp up infrastructure development in the years that ensue. So you might not see it in 2020, but 2021 and 2022 will likely be these big markets where governments are going to come out with relatively sizable budgets. And also the private sector is going to partner with them either directly or through PPPs to try and resuscitate economic growth. It tends to be a typical route that they take given the multiply effects it has not only on the economy, but on jobs across the country as well. And notwithstanding, if you consider in the African context, 150 to 200 billion is the estimated amount of economic destruction that was estimated by AFDB. And you combine that with what they spoke about last year, where they indicated that infrastructure developments in Africa are needed worth around 400 billion, give or take. It tells you that this will likely be an area that gets targeted relatively soon. It's just probably not today or this year.
Thanks, Danny. The next question I've got is for the Trade Law Chambers team. It's a broad-based one, but maybe you could just touch on it quickly. If I want to do business in any African markets, where do I start?
Thanks, Nicola. I'll take that one. The best place to start is obviously coming to us. But if you don't do that, I think, obviously you've got to do the ABCs, the basics first. First, you need to research the markets, whether it's viable, etc. I mean, I'm going to use something that's out of context of Africa, but it's also relevant for Africa. I remember when the world opened up, or rather when China opened up to the world, at the beginning of this, in 2000. Everybody wanted to flock there, but most people burned their fingers quite dramatically. Just because the numbers made sense doesn't mean that it's an actual viable market. So there's many things to look at. But from a stance point is, I think that the first thing that you need to understand is how are you going to enter that market? Do you need a physical presence there? Do you need a store there? Are you providing a service there? Do you need a branch? Can you have a distribution network? Can you just hook up with someone who is local? So those are some of the things I think is to consider. And then, going to someone who's knowledgeable on it, experts within that particular market, whether they're resident there or not, to have discussions with them. And I think, going to people and getting a broad-based view as to, these are all the kind of considerations that you need to have a look at, and then making up your mind from that particular point in time. And of course, very importantly, I think when going to these advisors who are going to assist you in, opening bank accounts and opening up companies and whatever else it is that you need to have done, is know what you're in for beforehand. Is this a 500,000 Rand exercise, or is it a 5 billion Rand exercise? Often there's a big disconnect between, what you might imagine you need to do in order to access a market versus what it actually takes, and then also what it actually costs.
Great, thank you, Rian. I've got another question for your team. How do Scottish businesses benefit from the, and I don't know how you pronounce this, the AfCFTA, AfCFTA?
Yeah, so that's the free trade arrangement that Niel spoke about. That's continental wide, or almost the entire continent, say for a few countries. So, and like Niel mentioned, these kind of agreements only really benefit people, directly where your country is a party to that particular agreement. But of course, there's very big indirect benefits. So for people or businesses who are forming part of it, it's from a market that's not included within the African continent. And that is through the indirect accessing of that particular market. All of a sudden, you no longer are accessing a market of 60 million people in South Africa, as an example. As all of a sudden, you're going to close to 1 billion people that you could potentially access. So the theory behind it is, in a goods particular example, is once a product comes in through South Africa, as an example, from Scotland, then in theory, that particular product travels duty-free and without hindrance to all of the other markets. So all of a sudden, the buying power that you're looking at is much greater. So much greater access to your particular product for that particular market. But the same is, of course, true for services. The idea behind it is that as a product enters a market, so do service providers. And because you're now entering this particular market, in theory, it should be that you are able to provide your particular services, oil and gas, renewable, whatever it is that you may want to provide those services within the entire continent.
Thank you, Rian. This is also fascinating. I think we could spend another hour just going through Q&As. I realize it is time, if our panelists are able to stay on for another 5 minutes, just so we can address all the questions, that would be great. But if you need to jump off, that's also totally fine. So we've got another question from McLean Sabanda around Tanzania, saying Tanzania is becoming a middle-class country. What would be the impact of this on their access to international donor funding, in particular grants for infrastructure projects? Perhaps this is one that you can respond to, Danny.
The ironic thing is, as you get rated higher and higher on your middle income levels, you get less access to funding. So I could see where that question is actually coming from. Yeah, so from a funding perspective and from a grants perspective, it is somewhat less in the sense that your exposure to some of the, if I can think about one immediately, the IMF as an example has the CTRT fund, which they tend to send out to low to middle income countries. Immediately, yeah, so low middle income to low income countries already. So automatically you lose that status. It's been the bane for several African countries now that I think about it. As an example, Namibia is rated upper middle income, and it was in part of the reason why the IMF and some of the other international parties delayed when it came to sending in funds during the COVID-19 crisis, simply because they believe you are better able to maintain funding. So from that perspective, yes, you do get less access, but the good side about it is, of course, that your economy has shown over several years that it's somewhat a little bit more resilient. It's on the right trajectory in terms of average economic growth. Its market size capitulated as well with the ease of doing business, allow it to be able to rank a little bit higher from an international rating perspective, and also allow it then to be able to engage a little bit more aggressively for bilateral trade agreements. So this is the key difference, where there's no restriction from Tanzania, as an example, getting into a direct agreement with Germany, Switzerland, etc. From that point in term, that really doesn't change. It's really more to do with your multilateral agencies, being your IMF, World Bank, and some of these international partners that really consider the ranking of the country, and ergo how it thinks about funding for development projects. I hope that answers that question.
Great, thank you.
I'm just also going to quickly butt in and say, it is worth bearing in mind. So some of the, as Eddie says, some of this funding does dry up, but it doesn't mean that there is no funding to be gotten, say, from the World Bank. It just is more selective. So South Africa, has borrowed and will get some kind of funding from the World Bank, but it will be for specific projects that are, say, infrastructure or development related. So I think that's worth bearing in mind. It's not that it just disappears completely.
Great, thank you, Siobhan.
Absolutely.
Okay, our next question is from Marisha Chilunda. You have rightly communicated the difficulties within the rural communities of South Africa as it pertains to access to ICT development opportunities due to various barriers. You contrasted the rural context with that of the urban context, expressing that technology of the lack of access to its opportunities are not so much of an issue in the urban context. What informs your assertion? Is that something you can respond to, Siobhan?
I'll give it a bit of a go. So I mean, I am aware that things like fiber to the home has definitely gone off quite, and fiber also for business purposes and such like has moved quite quickly, through our cities. In rural areas, as I understand, it hasn't been quite, we haven't seen it being quite as widespread, because the laying down of fiber is actually quite a process, so from a physical infrastructure point of view, it's a lot more costly and needs a lot more investment. And my understanding has been that most of this has been done by private sector companies, and so they might not also see the same kind of incentive to be going to your more kind of sparsely populated areas. Of course, and this is the thing, and it's always worth knowing, is something like your cell phone technology. I mean, it is limited when you start going rural, but, you know, cell phones are used quite widely around the country, both, you know, in both urban and rural areas. It's just that, you know, some networks have wider coverage than others.
Thank you, Siobhan. I've got another question for Rian. Does the UK SACU plus Mozambique Economic Partnership Agreement allow for Scottish financial service providers to provide their services in SACU and Mozambique?
Thanks, Nicola. Yeah, unfortunately, one would think it is the case, but unfortunately it's not. There's a school of thought that's unfortunately taken hold in terms of all kind of trade negotiations, where we kind of test the waters first and to see how we can integrate our economies by first just shipping some goods, you know, to and from. But, you know, service providers are playing obviously a very crucial role in the trade of goods. So it's typically that you see it on the back burner. Then we start negotiating about, you know, trade and services. So South Africa and Mozambique and the UK, we don't currently have that. It's definitely something that at least the British government said that they definitely want to do in terms of Brexit. You know, once they've managed to tie up all the loose ends in terms of Brexit and all of their trading arrangements, they want to look at some key markets that they operate in and that people operate in their markets in. And they want to have a discussion about, you know, how do we trade in services. So currently the answer is no, it's not immediately free and open for you to be able to do that. But at least from a South African point of view, we are quite a liberal country in terms of the world, in terms of trade and services. So it's quite possible for numerous service providers to actually come and provide some other service in the South African market with little to no hindrance.
Oops, sorry. Thank you. I know some of the panelists need to jump off. There was another question from McLean Sabanda, which is probably a Danny one, but let's see if Siobhan is happy to take it. The question is, we're seeing corruption relating to COVID procurement in South Africa. What is your take regarding the extent of corruption in the rest of the continent relating COVID procurement and its impact on the economic recoveries?
Yeah, unfortunately, of all the questions, that's definitely one that I don't know anything about.
Sorry, I'll jump in here. I'm still on the line.
Jenny.
Okay, awesome. It's a tough one. I wouldn't blatantly call out any specific country for having COVID-related procurement issues. What I will say is that, and I have to be very careful as to how I color this, procurement has been a delicate thing for most of our African countries from two sides, not necessarily just specific to the larger health and pharmaceutical segment, but then also in terms of execution of larger projects. So most of our governments have come under close scrutiny from delays in terms of their general tendering process. And so I would only assume that that would be similar with respect to a case like now where COVID-related urgency was needed. And if countries did not necessarily have the requisite systems in place to allow for distribution, purchasing and execution of COVID-related whatever pharmaceutical products or medicinal substances, then it becomes quite difficult for one to argue that they'll be able to do it during this time of crisis. So it's a hard one. I definitely will not call out any African country for struggling with that corruption, but willing to take a personal call where we can chat around what it is you're seeing and how it is you think it will impact the continent. It's a tricky one. Thanks, though.
Thanks, Danny. Thanks for your diplomatic response.
I tried.
You did well. I've got one more question for Rian, and then I think we'll probably close the session. But if anyone in the audience does have questions for the panelists, please connect with us afterwards, and I'm sure we can open up a line of communication. So this one is around, may a Scottish manufacturer set up a facility in South Africa and export to Kenya duty-free and without hindrance?
Thanks for that, Nicola. Yeah, in theory, you should be able to do so shortly. And that really depends on how it is that you set up. So as Niel alluded to, once you have a particular product, it should be seen as originating within the country that you wanted to see being exported from. So if you set up in South Africa and everything is, you know, only obtained from South Africa, and then you send it over to Kenya, then yes, in terms of the tripartite free trade agreement that we have, you'll be able to get that particular product into that particular market. But there are other rules. For instance, in the tripartite, you only need to add 30% local content requirement, or value addition really is the term that they use. So only 30% value needs to be added in South Africa for all that particular product to be able to go to Kenya duty free. So it's most definitely a possibility. Yes, absolutely.
Great, thank you, Rian. I think we're going to close the session today. I really wanted to thank, you know, the team from RMB and Trade Law Chambers. You guys have been fantastic. I think, you know, we could have, as I said, we could have spent a lot longer unpacking some of these topics. So I'm just going to share our details now. If anyone would like to connect with the panelists or with anyone else at the network, please get in touch with us. These are our contact details, and we will happily connect you after the session. Thank you everyone so much for your time. I hope you found that as fascinating as I did, and we look forward to welcome you at our next webinar. This is one of 3, and we will be sending details out to everyone after the session around that, should you wish to join us. Thank you so much, and enjoy your day further. Bye.
Thanks.